to us on your iPhone, Android phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, the 10th day of January, 2018. Happy Wednesday. Hope you're having a great Wednesday wherever you are. Depending upon your time zone, you're already over the hump, and you are on that downward slide into the weekend. Daydreaming, looking out the window. Here in Studio A today, the weather's so pleasant. We had a nice rain last night. We have the windows open. Not a lot of days in Arizona that you can do that because it's either too hot or too chilly, so today's just right. Goldilocks would have loved it. Okay, let me tell you about a thing or two. A thing or two about a thing or two. You ever heard of a guy called Tom Lee? That ring a bell? He's a Wall Street strategist. He is the co-founder at FundStrat Global Advisors. He seems confident that the cryptocurrency market is still going through what he calls a price discovery process, predicting Bitcoin could easily double in an interview he did with CNBC yesterday. Now, in late November of last year, 2017, Lee was similarly bullish about the leading cryptocurrency, encouraging his clients to invest and likely making some money in the end. Now, that was November. In August, he was confidently predicting highs over 6,000 by the end of 2017, but his prediction was, as we all know, way outperformed. Bitcoin hit $10,000 by late November of last year. Basing his prediction today on steady growth in the first quarter of 2018, Lee went on to suggest that Bitcoin could well surpass the highs seen in late 2017. We came this close to 20,000. Here's a direct quote. We think that by mid-2018, we're going to be part of the wave, or part of the way there, and that's why we get Bitcoin to 20,000. If Bitcoin can actually rise and close at that level or above that level in the first half of this year, I think the second half of 2018 we'll see a move even bigger than that. So, in Tom Lee's opinion, Bitcoin is still something you should own. Lee also believes that younger generations are more likely to invest in Bitcoin in the long term the way older generations used gold as a store of value. And I quote, "We still think the easiest way to look at Bitcoin on a long-term basis is as a store of value. As the millennials generate income, they're going to use it as a replacement for gold. If Bitcoin gets 5% of the gold market, that's roughly $50,000 per Bitcoin." End quote. Despite the tough past few weeks of volatility in the crypto market, large traditional financial institutions have also been showing bullish sentiment of late. Following in the footsteps of the CME and the CBOE, who launched Bitcoin futures contracts in December, the New York Stock Exchange has applied for authorization to launch Bitcoin exchange-traded funds, or ETFs, linked to those CME and CBOE futures products. Meanwhile, NASDAQ and Goldman Sachs are working on their very own cryptocurrency trading desk. These types of moves in traditional finance have previously stoked the markets, as we saw in the run-up in the futures launch in a bull run that saw Bitcoin hit an all-time, well, they're quoting $20,000 high, but on our charts it didn't quite make 20, but it was so close. It was like just a little over $100. So there you have it from Tom Lee. Again, he's a Wall Street strategist and co-founder of Fundstrat Global Advisors. Confident the crypto market, Bitcoin in particular, still going through a price discovery process, and that it could easily double in the coming year. So if you got a few Bitcoins in your digital wallet, that's got to bring a smile to your face. Okay, let's look at the numbers real quick from around the world, and then we'll ask Michael to come in and give us a recap of everything that happened today in the live training room. Now, I've got a chart up of the S&P 500 Emini Futures. If you can't see the chart, go to our homepage, cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. 30 seconds, you'll be registered all the way through the end of the month. That means each day you join the show, one-click access on your terms. Okay? You can also go to youtube.com/CFRN/live, bookmark that page, and you will have one-click access every day, 12 to 2 p.m. Eastern. All right? Now, the color of the day yesterday was a brilliant green. Today, not so much. Cash markets, the Dow down 21 points, NASDAQ down 27, S&P 500 down 5, and the Russell 2000 down 3. In our commodity basket, crude oil up 33 cents. That's just over half of 1%, trading 63.29 last. Gold up $4.30. This breaks the 2-day red streak we had. Gold up $4.30, trading 13.18 last. in the Asian markets. Colors mixed. Nikkei closed down 62 points. The Shanghai was up 8 at the close, and the Hang Seng tacked on a positive 62 points today. In European markets, the FTSE up 18 points on the session. The DAX took a hit, down 104 points. That's 0.75%. And the CAC at the close down 19 points to end the session. So there you have it. We are mixed in Asia, mixed in Europe, but here at home, red is the color of the day. They say Trump's going to deliver a carrot and stick address to billionaires and world leaders at Davos. We'll talk about that when we come back. We'll check in with John. Wayne Jett's on the road this weekend, or this week, so his email, I wasn't sure if he was saying he wouldn't be here or he was going to join us from the road. So, it'll be a surprise. Michael, if you are ready.
Okay, I am ready.
You are ready. Yeah, I recognize the voice. Okay.
Indeed. All right, let me bring this over here to this monitor. And this.
Now, to those of you I was pointing out, okay.
Sorry, I just
No, that's quite all right. I'll go over it with you guys. This week's zones are up a day early because there's a couple things I want to point out to you. On the S&P, they're up anyway, so we'll go over that. And we've had some just real nice zone-to-zone action, and we'd love to see that. We'd love to see that. Okay, I'll hit mute, and it's your show.
All right.
It's your radio, bro. Here we go.
Here we go. All right. Good afternoon, everyone. Today, well, hang on a second. Okay, well. All right. Good afternoon, everyone. Today is the 10th day of January, 2018. It is Wednesday, the 10th day of January, 2018. Now, if you have not taken a free trial with us, go to the homepage here at CFRN.net, and when you go to the homepage, you click on that. Go to the homepage, watch up here. That banner is going to come down. It says sign up for the CFRN live training room, 100% free trial, user indicators, learn our strategy. Click here. Now, when you click there, you will be brought to this page right here, where all we ask for is your email, your first name, and how you found us. You hit the submit button. When you hit that submit button, you'll be sent a confirmation link. You must click on that confirmation link. Okay. If you don't click on the confirmation link, you will not get a free trial because we don't know you took the trial until you click that link. Okay? Okay. Now, the spreadsheet. Well, let's go over the news, a little bit of news. Today, we had crude inventories come out, minus 4.9 million. The API numbers were way off. They were minus 11 million. So that's an anomaly, the API numbers to be that far off for the crude. Now, I'll get into that in a few minutes here. But, yeah, we had some other low-impact news that was bad, just a little bit bad. Import prices, though, that was bad news. And that was off by quite a bit, really. And if you look at the import prices, it's the change in the price of imported goods and services purchased domestically. Okay. Actual greater than forecast is good for currency, so it was less than forecast, so it's bad for currency. Okay. And this is the earliest government-released inflation data. Okay, so you got to keep a handle on that stuff. Oh, the spreadsheet. That was what I was going to go to next. All right. Today in the room, it's the 10th of January, as I had said, and we made 11 ticks profit on the euro, 5 ticks profit on the Russell, and 7 ticks profit on gold. That put us at 163.75 per contract this morning. Okay, today it took 42 minutes and 3 trades to get to the goal for the day. At that point, we're at 132.50. 132.50. And we took a total of 4 trading opportunities this morning. So on the month now, we're up $820 for one contract. That's trading one contract, 2 hours per day. And we took a total of 7 trade opportunities. So we're averaging 117 per day. That's on the month and on the year. And yes, I still need to fix this darn spreadsheet. I know I'm going to drag that out till the end of the month. But anyway, we're at 117 average per day so far this year. Okay. Now, put that over here on the side. And check that really quick. And that's all good. Go back to that. Minimize it. And now I'll go over the trade setups. Okay. In gold. I was a few minutes late this morning. I hit the off button instead of the snooze button. And Jada woke me up at 9:40. Said, Michael, you're late. You're late. Anyway, there was a shorting opportunity right here and right here that I had missed. Now this one I was there for. I just missed it. But we did grab this one for 7 ticks, and this one right here, well, gave a few ticks in profit anyway. The rest of the morning there wasn't anything that we could do. And then during the break, there was a shorting opportunity right here for that leg down, and that was it. So not a lot of opportunity today on gold, and I missed 1, 2. Well, I didn't really miss this one. I wasn't even here for it, but I missed 2 out of 3, and they were both winning trades. Now on the euro, we started out with this one right here on the euro. Now, again, I was a few minutes late this morning, so, well, I didn't really miss anything. I guess I missed this leg down right here. That was it. But when I got in, I jumped in. I got 6 ticks on this one. I missed that momentum trade. I had a break even here, and I got 5 more ticks over here on the euro. Let's see. After that, there was momentum short there, and really nothing else since then. I mean, it was trending down, nice long trend down, but with the trade setups that we do in the room, there was nothing else in there. Okay, so we're plus 11 on the euro. On crude oil, now let's scroll back to the beginning of the morning here. It looks like we should have put in a lower low right there. It was momentum short at 8.55, so we weren't trending at this point. Then we started to trend right here, then the cycle started going up too steep for short trades. Now this area right here, I drew this yesterday afternoon. Let me back it out, sorry. I drew this area in yesterday afternoon. You can see 1630 right there. That's when I actually drew it in. The API numbers came out yesterday with minus 11 million barrels. And you see price built it all right in. And I drew this area in because I said when the inventory numbers come out today, look for it to get back down into this area right here. And then move up to this red line that I drew up here. It didn't quite make it up to the red line, but it was definitely down into this area right here. We didn't have any trade setups today. Well, we had one here, and one there that I missed, and one here that I missed, but none that I took. Okay, during the break there was a shorting opportunity right here. Would I have taken that? No. No, I would not have. And that was it. So 1, 2, 3. And I missed all 3 of them. I believe I tried to get in them, but I didn't get filled because I was doing other stuff and I wasn't being proactive. Okay, on the Russell. On the Russell, here we go. Okay, now if I had been here on time this morning, we'd have started shorting the Russell here, and then gone long right here and right there, and then done nothing right there, but we'd have taken a short here and a short right there. Okay, and we missed one right there. We picked up 5 ticks on this, and we missed the follow-up trade right there. and then we missed a couple more in here. Now, I know I was doing something else or talking to somebody else or texting somebody else or something at that time that I missed all that. But there's another short right there. Now, you know, the goal here is for you guys to learn how to trade and not need me. That's the goal. So all these things that I'm missing, you know, you guys should be picking those up if you're not distracted like I am. You guys should be picking those up because every one of those was a winning trade. Every one was a winning trade. Okay. Now in here, there was another long there, another long there. We changed directions and we didn't have anything that we could do, and we changed directions again, and there was a long there, but this is during the break now. There was a long there. There was one right here that looks like it would have stopped you out. Okay, then you would have needed a higher swing, get up above that dynamic resistance, and would have had a long right there into the high of the day. And that was the Russell. Now the ES was a shocker today because, well, it moved around. If you look at it, it went down to the zone right here, put it in the low of the day, right in the middle of the zone. Came off of that, gave a long trade here, a long trade here, a long trade there. Went right up to this zone, to the tick, pulled off it, and came back. Tested it again, and that's what it's doing right now. It's right inside it, testing it. Okay, so the ES was kind of a shocker today with all that volatility. And that was it. That was our morning. Okay, so over here, we'll come back to the spreadsheet, tell you one more time. Today was the 10th of January. We made 11 ticks on the euro, 5 ticks on the Russell, 7 ticks on gold. That's 163.75. And 42 minutes and 3 trades to get to 132.50. That's over 4 trades. On the month now, $820 a contract. That's over 7 days, averaging 117 per day. Okay, that's on the month and on the year. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Okay. If you have not taken a free trial with us, go to the home page here at CFRN.net. Right up here at the top where it says sign up for the CFRN Live Training Room, 100% free trial. User indicators learn our strategy. Click here. You click there, and that will bring you to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, you will not get a free trial. All right? All right. That's it for now, guys. With that, we'll pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am indeed.
Oh, okay. Okay. All right.
Let me get the charts.
Okay.
Recap the recap.
Charts. Today, it took 42 minutes and 3 trades to get to 132.50. 132.50 today.
Got a little streak going there.
I knock on.
I already did.
Knock on wood. Okay.
Now, here's the reason. Because the market is trending, whether it's up or down. And this week we've seen it trend up, we've seen it trend down, we've seen it trend back up and back down. And the river has to be flowing. That's all we need is a futures trader. Okay, it's not like the stock market. This is not like your retirement account. This is not buy and hold, hoping that it will appreciate in price over time. This is recognizing opportunity as it presents itself and capitalizing on that. It's that simple. When the river is not flowing, it becomes very difficult to not only produce income, it becomes very difficult not to lose money that you've already earned. Now, we don't look at it as winning and losing. Those are gamblers' terms. It is in fact the cost of doing business. The nice thing about the CFRN indicator set and the other things we provide, like the weekly trading zones and the mentoring, brings you to a place where hopefully you will learn to recognize sooner than later if you're on the wrong side of a trade, or just the rules-based nature of the live training room, you're never at a loss as to what you should do. There's 5 rules. They're clear-cut. They're simple. Anyone can understand them. So if you have basic computer skills, you can do a little math in your head. You can learn this simple methodology. The beauty of this simple methodology, not only is it simple, which that in and of itself is huge, but once you learn the trade setup, once you learn how to read the indicators, whether you want to trade S&P or Dow or Russell or Crude or Euro, matters not, because we trade every market exactly the same. That's why in the morning Michael has up 4 or 5 charts, 4 or 5 different markets, so that you'll be able to see as he moves from market to market seamlessly. He's able to do it seamlessly because he's not having to change time frames, he's not having to change indicators, he's not having to remember what the steps are to that other setup. You trade it the way it is in front of you, and once you learn the methodology, okay, if the S&P is not flowing today, not providing any high probability setups as defined by our 5 simple rules, then as you gain experience, in the beginning we want you to just focus on a couple markets so you don't get overwhelmed. But as you gain experience, you can, that's the reason I have the tabbed chart. Some of my tabs broke loose, and so, but anyway, on the chart, like, oh, this one, you see my tab. See, I can just bing, 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 go across, take a look at the markets, and I can find the one that's setting up. And it doesn't matter if it's crude or gold or the euro or the S&P, whichever one's got a setup. And if there's also weekly zones to layer on top of that to give me an even higher probability opportunity, I trade that market. People say, well, what market do you trade? Well, whichever one is providing a setup when I sit down. Now, what I was going to point out earlier, these are this week's zones. Okay, we hit the zone here, 2748/2749. We consolidated, and then, as it will do, we went up, and then we came right back to the zone to confirm that it really was going to be good support for the leg up. I've drawn that little once it breaks through, we see that over and over and over and over, up and then, you know, yesterday did something a little unusual in that it ran right up to that same spot, pulled back again, okay, and then on this candle it meant business, and right up to the zone, and then it spiked it, which will happen. Remember, there's 3 things to expect at a zone. Consolidation, that's the most probable. Then there's rejection, which would be this. See how when we came down here, at one point this was a great big red candle, and it looked like, you know, the sky was falling. But before the 30 minutes was up, and it would not surprise me any whatsoever to see that this happened in the last 5 to 10 minutes of that 30-minute candle, the price rushed back up. Now, it may not have. It may have come down, touched it, and immediately ran away. That's typically what I mean by rejection. It's like touching a hot stove. When you touch the hot stove, you don't sit there and think about, man, I really should take my finger off this stove. It's a knee-jerk reaction. I mean, boom. That's rejection, okay? And then the third and least likely, but we do see it, is a hot knife through butter, and that's when price slices through the zone like it wasn't even there, and then comes back to test. You see how there was consolidation here, right here. We consolidated above this, and then we had some candles in here. There's consolidation in all these points, except this one. It rejected it there, and it rejected it there. We have no hot knife through butter example on here. Okay. If you take nothing else away from anything I've ever said, you got the zones to work with. This little pattern here. Because once price is finished consolidating, which is the most common thing to happen, when it's finished consolidating, it is going to do one of two things. It's going to gravitate to the zone overhead, or it's going to gravitate to the zone below. Now, at this point in time, this 30-minute candle just opened up. It's been open 5 minutes. But type into the chat box. Tell me, from what you can see here, do you think price will see 27.57 first or 27.37 first? These are this week's zones. Keep that in mind. With what you're looking at right here and what's happened so far, what do you think? In fact, let me see if I can squeeze it up so we get the Globex open in. Ooh, that's a little hard to look at. Let me bump it out. Alright, I'll show you this for a minute and then we'll roll it out. Okay, Sunday night Globex opened. We ran up. Looks like we missed the zone by a tick. Came back down. Hit the zone. Consolidated right there above it. And then made a run to the zone overhead. Price then made an attempt at the lower zone, but buying pressure was greater than selling pressure. That'll happen. Okay. What's interesting is where it happened. Okay. Because the night before in the Concierge Trade Alerts, we had said consider selling 27.43 because that is an important price and an important area. And you look at the chart and you go, well, how do I know it's an important price, important area? Well, check the email I sent you last night. That's how you know it, because I put it in the email. All right. So price comes through, comes back to test, down to the zone. This time we blow through the zone. We don't create another leg to the downside. We bounce our head up and down here. I mean, is this going to be good resistance? Yep. Yep. But as price starts to drop, the low of that candle is 27.4275. 27.4275. One tick above the trigger to go short at 27.43. So let's say you were getting short off of this zone here on this move. Okay. Do you want to be aware of this? Yeah. Do you have to understand that the potential for this area, even though, many hours have passed since this initial trigger, that this is a key area. If we close on the other side of this key area, then it becomes an extremely high probability that we're going to visit the zone below. If we can't close below this area, then this area is serving as good support, not resistance. And leg, consolidate with a little retracement, and a leg, and a retracement, and a leg, and a retracement, and a leg, and a retrace, and a leg, and a retrace, and whoa, right there, we don't get another leg. everything changed here. Leg retrace, leg retrace, leg retrace, leg retrace, leg retrace, leg retrace, no leg. Now, we, in our very simple 5-step methodology, we don't get into patterns like head and shoulders. Not that there's anything wrong with them. I mean, they work as well today as they worked the day somebody first identified. And it's not just because it looks like a head and a shoulder and you can draw a neckline. There's a reason. The psychology of the buyers. It's the reason this pattern develops the way that it does. And it held true. Okay. Now, so okay, well, if it works, then why don't you teach that as part of your methodology? Well, there's a whole lot of stuff that works. See, everything works some of the time, but nothing works all the time. I don't care what their website says. Nothing works all the time. But everything works some of the time. So it's good that you know this, and over time you will. Maybe if you're brand new and you're focused on learning the 5 rules in the morning, you'll get exposed to this and you'll start to see it and recognize it, and it'll become a part of your decision-making process, perhaps. But it won't be how you trade. Oh, I only trade head and shoulders. Okay. Well, I mean, you could do that, but you're limiting yourself quite a bit. Same thing with learning to read candlesticks. If you can Google the secret life of CFRN, the secret life of candles. There's a little slideshow there with the 10 major candlestick patterns. Do we use those in the live training room? No, because we're using a range chart, and every candle is 4 ticks tall. See, a candle on a time-based or volume-based chart is an indication of investor. It's a visual indication of investor sentiment for whatever time frame you're looking at. Hourly, daily, weekly, whatever the case might be. Okay? Now, this is, I got to say it again, this is where everything changed. Leg retrace, blah, blah. If the trend was still on, we'd have put in a higher high. Right? So when we didn't, and price began to fail right below the zone, that really kind of snaps you wide awake, and you go, this might be just what I'm looking for today. Now, I was in a mentoring session yesterday. Very nice man. And I threw the indicators up on a 30-minute chart to kind of make a point. You hear us say all the time, markets are fractal in nature. What happens on a 1-minute chart happens on an hourly, weekly, daily. And all that means is if I took away the prices and I took away the time and date at the bottom, you'd have no way of knowing this was a 30-minute chart. Some might guess it's a 1 minute. Oh, that's a 5-minute. Oh, no, that's got to be a daily, or a weekly. Why? See, without these labels, there's no way to tell. That's what fractal in nature means. Now, as price was running up from zone to zone, look at the CFMA1. Price was on the north side, boom. Now, once we came within a tick there and we pull back, right, we start to walk sideways, we get on the back side of the MA1. Then the MA1 starts to turn red. Oh, wait, and we've got a Concierge Trade Alert right here. A lot of things coming together to help me see that this has the potential to be a high probability trade setup. And, in fact, in that case, it turned out to be. Okay? Now, look what happens right here. Right at the trigger that I'd given out the night before, as we come back up through it, we get a bullish cross. And you see how price walks right up on the north side of the CFMA1. And sideways, then back down to that area we spoke about. See, on this bearish cross, there is no trade setup. Why? Because we don't have a pull away. Okay? Got to pull away after the cross, pull back, down close, sell the open of the next candle, -1 tick. Bullish cross. Hit the zone, pull back to the BBC, to the tick, up close, buy the open of the next candle, +1 tick, and what do? Well, I mean, you got some back and forth, and a lot of time transpires because these are 30-minute candles. But you go from this zone to this zone, right? Then we fail to put in that leg. What happens? The CFMA1 rolls over and turns red. I don't like to buy into a red CFMA1. Am I saying that it always turns down? No, sometimes it'll march right through it, and then it'll turn blue again. Okay? But if I know one of two things can happen, then I'm not going to buy into it. Just like I'm not going to sell into this, I'm not going to buy into this. Now we get a bearish cross. Okay, here's the cross. Price pulls away, price pulls back, down close, sell the open of the next candle, -1 tick. Now, what I just said about buying into red, some say about selling into blue. Okay, so you might, it might fit into your discretionary method that, I'm going to go ahead and risk, because my risk is only to here, I don't have much risk, I'm going to go with this. Or patience and, wow, okay, we closed below that red CFMA1, or the blue. It's now red. Now, but we're running into a zone. Oh boy. Well, that has the potential to be good support. Okay, a little consolidation. Here's that pattern I drew in reverse. Leg, retrace, leg. Price breaks through, pulls back up to the zone to make sure that it's going to be good resistance. And what does it do? Hits the Concierge Trade Alert trigger, and boom, down it goes to the weekly zone. And just a reminder, the weekly zones are sent to the partners every Monday morning at 6:15 a.m. Eastern. So they have plenty of time to get them on their charts before Wall Street even wakes up. All the rich white guys are still turning over in bed, and the partners are getting them zones on the chart. Let's see if John's here yet. Yes, he is. Hey, John, welcome to the show. Okay. I better let him know. Give me a second. And yesterday, we didn't have sound because of the update on Windows. On my Edcast, a piece of software on the radio server, for some reason, the Windows update changed that setting. Every time I do a Windows update, I end up having an issue. I don't know if you've experienced that or not. I'm sure you have. Alright, let me jingle his phone, see if he's available. Okay, now he knows we're here. Almost seems a little primitive that I have to call him. Maybe we should do like an instant messenger thing. Okay, I'm going to tell you something really exciting. You can now get a 146-inch TV called the Wall. And guess what? It changes sizes. I know. Samsung introduced a new 4K HDR TV the company simply calls the Wall at the Consumer Electronics Show. I want to go there someday. It's an annual thing. It's in Vegas. All the new electronic toys are out. Samsung touts the Wall as the world's first modular TV that lets you adjust its size that will best fit your living room's wall or wherever else you want to put a giant TV screen. I mean, think about it. I have a 55-inch downstairs. It's pretty big. 164-inch. That would be 3 times that size. Yeah. Now, the particular model Samsung displayed at CES measures in at 146 diagonal inches. At that size, a TV is better off mounted on a wall or even sunken into a wall in your home. Even at its enormous size, the 4K resolution is razor sharp. The Wall, as it's called, is also a micro LED display which carries many of the benefits of OLED displays, including the perfect reproduction of the color black. You might not know, I didn't know until I read about it, but the ability to reproduce the color black is really what makes the difference in these high-end TVs, one of the contributing factors. Infinity contrast ratio and gorgeous colors. According to Samsung, micro LED displays don't suffer from burn-in. That's when artifacts can become stuck and even visible after a scene changes. On my 47-inch display, which is what you guys are looking at right now, it doesn't come through on your end, I don't think, but I can clearly see, like right here, there's a bunch of candles burned in. It's got burned in everywhere. So anyway, now the gentleman who wrote this article says, from my experience at CES, Samsung's micro LED displays certainly equal OLED display in picture quality, and it could feasibly be used for smaller TV sets that don't necessarily take up an entire wall. But whether or not micro LED TVs could contend for a spot in your living room over OLED TVs remain to be seen. Few details exist about the Wall, including its price, the price of modules, or availability, but Samsung says it will release more details in March. It's likely to be a concept or ultra-luxury product with a price tag as large as the screen at first. But there's always the possibility that the technology will develop to the point of commercial viability. Oh, so they don't even know if this dog's going to hunt yet. But it has modular pieces. That's how you change the size of it. It's the world's first modular TV which lets you adjust its size to best fit your environment. Now, you got to admit, that's pretty cool. If you need to put it on a small wall, you can. I wonder how small you can make it. Wow, if you could like put it in your suitcase. And then when you get to your destination, you have a wall-sized TV. Yeah, that's a little much to ask for, don't you think? I don't know. Got flying cars. John, are you there? He must be having some difficulty on his end. Well, let me look at my email. Maybe he tried to reach me. And Michael, if you're still there in the background, I just sent you an email too, so get a chance, please check it. Okay. All right, I'll just leave John with an open mic, and when I hear him, we hear him. Okay? I sent him an email. All right, let's get through. What else we got? Oh, there's something else here I thought you might find of interest. Other than a 164-inch TV. That's a big TV. But I need one. I remember as a kid in my bedroom, and for a working class poor family, I guess it was actually pretty upscale. I had my own little black and white TV. Yep. Another page ripped from the life of me. Oh, yeah, this is it. This is kind of a big deal. Mark Zuckerberg, who some of you may have heard of. Number one, he's planning to get into the cryptocurrency business over at the Facebook. But he's also chasing Amazon with this one. Facebook has plans to sell a video chat device called Portal. It'll cost you $499. It'll be available later this year. Facebook's hardware device, whose existence under the code name Aloha was first reported back in August by Business Insider. This is Facebook's answer to the smart speaker and smart screen products such as the Amazon Echo Show and newly announced products from Lenovo, Sony, and LG, all using Google Assistant. Now, we talked about this on the program here when the product first became available from Amazon. You take it into your walk-in closet, and once, you know, a person gets dressed, I would think ladies might use this more than men, but, you know, if you're a single man living alone, I mean, you don't have someone to tell you you got a booger, you know what I mean? Or the tie's horrible, or you got a stain on your backside, you know what I'm saying? I have a wife, so she makes sure I look presentable before I go outside, but single people don't have that. And when women ask, does this make my backside look large, they know they're not going to get an honest answer from their spouse. So, Amazon saw a problem, and they solved it. You get all dressed up, and then you hit the button on your thing, and a person appears on the screen. A real live person. And you say, well, how do I look today? And hopefully they go, you look nice today. But she might say, change the scarf, change the shirt. What were you thinking? You know, just start over and, you know, ring me back. I'm serious. This exists. People have them in their closets. How do you know they're not watching you when you don't want them to watch you? Huh? You drape something over it? Yeah, I suppose that'll work. Unless it's got laser vision. But everyone I've spoke to about that device says, I would not be comfortable with that. Having some stranger in my closet with me telling me if I looked okay. Well, this device that's coming out from Facebook, it's not created for that purpose. It's created to just keep you on Facebook all day long. Clicking the clickbait, baby, because that's how Mark makes his ducats. Now, Facebook will face tough odds as it tries to catch up with the rival tech giants in a market that many believe could become the next major computing platform. The $499 price tag is higher than comparable products from Amazon and Google, though Cheddar is a financial news site. There you are, John.
Yeah.
Welcome to the show. Let me just finish this thought real quick here.
Okay.
Yeah, go ahead. For the $490 price tag is higher than comparable products. Facebook has had little experience creating hardware products besides the Oculus virtual reality business, which I haven't heard much about. Facebook also killed its fledgling virtual assistant product, dubbed M, after 2 years of tests with consumers. The move questions whether Facebook's portal will be able to match the capabilities of the Amazon or Google products, which rely on sophisticated virtual assistants to respond to user queries. According to the Cheddar report, Facebook is positioning Portal as more of a communications device for users of the social network. Portal is the first device to come out of Facebook's troubled Building 8 hardware group, and according to Cheddar, the device could be unveiled at Facebook's upcoming developer conference this spring. So, we're just talking about the new product that Facebook is coming out with. It is called, once again, did they give it a name? Yes, Portal, that's right. Facebook's video chat device. So how are you today, John?
Not too bad, thanks. I actually kind of was up all night because there was a lot of opportunity during the night on the trading. And
yes, there was.
I kind of, when I said there's another year in this market yesterday, I was jinxing myself by saying that, but it didn't stop me from selling just about everything, going into the close and shorting it. And we covered it. I told people to cover in reverse on the spike down this morning, between 10 and 11 or so. And that worked out pretty well so far. As a matter of fact, our chief, we had some really good shorts yesterday from, I think we took about $5 out of Baidu or Baba, one or the other. NVIDIA from 223 down to 216, 217 this morning. We were short Western Digital, which also had a big spill. LED, OLED, Intel, which is not rallied yet. And there were a couple of other really good ones. There are a couple of other $5 or $10. AMBA, check that out. AMBA. I noticed that was
AMBA. Yeah, I'll bring it up.
Yeah, it's down about $4 right now. So that was a fantastic short yesterday. We shorted that going to the close. But the markets are coming back. Now I noticed that you've got this head and shoulders thing going on.
Yeah, I pointed it out only because as I was explaining, how the market has moved since the Globex Open Sunday night, I happened to spot it.
I saw that coming together last night. That's why we sold it. We actually sold the S&P right up there, right up the level, and we covered it. Look, we took about 20 points out of it, and we're back long. But I think it's possibly going to fall over here. Look, there's two ways of looking at this. The most powerful thing in a bull market is what I call a negated head and shoulders formation. In other words, if this thing keeps going, and it could, we start taking out that high we put in yesterday, it's really, really bullish. And actually, if you go back to 1987 and see what happened about 6 or 7 days into the new year, you'll see there was something similar to what happened here with the market kind of overshot, and then it had a kind of a one-day sell-off, and then it continued higher, and it never stopped going higher. And believe it or not, that's what made me cover this morning, because I had a look at that, and it bothered me. At one stage it looked like the market was going to tank today. At about 5 or 6 this morning, it really looked like it was in trouble. And then when it made this lower low, it didn't follow through. So
this lower low right now, here,
well, not so much on that one, but it was much more pronounced on the Nasdaq.
On the Nasdaq?
We came back.
Okay, I'll bring that up. Nasdaq. Oh, did I ever bring? Yeah, I brought it out there. That umbrella. I don't think I ever.
Yeah.
Let me just. This company. Okay, is this something that just came out of your radar today?
No, I've been kind of keeping an eye on it. It's been performing very well up until a few days ago, and it's suddenly where it got into trouble. It's linked to GoPro.
Oh.
And when GoPro crashed, that's when this thing started coming undone. So.
That fellow behind GoPro.
Yeah.
Does he intentionally make himself unlikable on Shark Tank? I pretty much like everybody, but it seems like he wants to rub people wrong. I don't know. Maybe it's just me.
Yeah, no, I think you're right. Well, sometimes when you get these new fellas on, they add a bit of spice to the show.
Yeah, well, this Chris Sacca. I mean, he's done some big things, but I don't know. I have a tough time warming up to him as well.
Yeah, no, there's a few of them that have. And there's another guy. There's this new English branding guy, sort of Indian English guy.
Oh yeah. I know Tom.
Yeah. Actually, I didn't. Maybe I was misreading that. Maybe just because of the way the Nasdaq spiked, it looked like it went to a new low. But actually, the fact.
Here we go.
Oh,
yeah.
it did spike down. Oh, it did. Okay, great. Yeah. So it was quite a pronounced spike, as you can see.
Now, was there some? That looks like almost looks like a. In fact, it's a doji, guys. I mean, after this fall, you get a doji. I mean, this is not unthinkable here. Was that a news-based spike? Do we have some news out this morning?
I don't think so. I think it just got down, and the VIX actually spiked on the upside when that happened, and that we actually sold the VXX at 26.80. It's now 25.93, and
nice.
the thanks. So and also LABU, we got that one this morning. That's one we shorted yesterday and covered it this morning at around 81 or so, and it's now 85. So that's been a heck of a trade, that one. And we also covered the FANGs, covered them a little bit early actually, but they were mostly spiking when we covered them, and they're all, with the exception of Google, they're all quite a bit higher right now. And also GILD went down overnight and is back up as well. So the market looks pretty firm, although it might be running out of gas here. I mean, look, if we go positive today, that's a huge thing, and we're not that far away from being positive on the S&P. If this is as good as it gets today, and we start slipping away in the afternoon, then we could be in trouble. And as the thing we pointed out yesterday, I think, is the semiconductors did not make a new high yesterday. I don't think they did, and versus some of the new highs that happened. And I mean, this was a very difficult top to pick because, let's face it, we were making new all-time highs in all 3 or 4 indices yesterday, and everything looked dandy until it suddenly started this late sell-off, and it kind of, it came undone fairly quickly. But it may be just that, look, it's not even a one-day wonder; it's about a half-day wonder right now. So, I mean, the sell-off, that is. So it's pretty, and it's funny. It's kind of tied to the dollar as well, because this morning gold overnight came down all the way just at 1309 again. Then it went back up. Then it it shot up to 1328. That's when the first low was made this morning. Before the open, and then we came back, held the 1316 area, and now we're pushing on 1320 again. And actually, it's starting to look like the gold could still go higher, before the day's out. The thing that's bothering me a bit is the palladium. The platinum's doing great, but the palladium is tanking off the recent highs. New all-time highs that it set a few days ago. Lumber, by the way, is actually making new all-time highs right now as we speak, and cotton is acting very well as well. It's having a pretty strong day. I mean, cotton has been a great. Remember, it was just down and down and down with the cotton.
Right.
After the hurricane and that, there was a bit of a pop after the hurricane, and then it sort of went down and down. Then it turned, and it's been on fire since, for the last few months. Cotton's been acting really well. So is copper, and the silver, it really has to hold this 17 area. It's very, very important. And if silver gets back over 17 and a quarter this time, or 17.30, then I think you can breathe a bit easier that the metals are really going to move. And it's quite possible that if the metals do move, they might spook the market. And the other factor, I mean, it's amazing. Look at the bonds. They crashed down through 150 this morning. That was part of the sell-off. The impetus for the sell-off. And when we bottomed around 149.20 or so, which I think is where we covered and reversed. It surprises me because I didn't honestly expect the bonds to rally as much as they are rallying right now. But they're back up to 149 and 3/4. So they might be going back up to test the 150, and then they could come off again. And if they come off again, they might knock the market down, because I think the market's getting, the thing about this market, the difference between the rising rates is when you've been so low for so long and the rates do start rising, it sort of spooks the stock guys. It might spook them for a day or half a day at the moment. But if we suddenly had, another few down days in the bonds, that could really, it could push the market, down possibly quite a bit. So, and look, it just, isn't it crazy? Here we go. Started out the day that Warren Buffett is being interviewed, and of course he says, he's going to make $37 billion from this tax cut. So how much is that worth to the price of Berkshire Hathaway? It's probably worth 10% or 20% upwards from here. So
he currently has 87 billion, right?
Something like that.
Give or take.
But So he's going to make an absolute fortune, and I guess this is over 10 years. He's going to save that money. But he's saying, today, and I think a lot of people are listening to him. I mean, I honestly believe if he hadn't said what he said this morning, the market might be tanking right now. Because when he said, it's not overheated, or it's not overvalued, that probably gave the market quite a bit of help. And it sort of came
at
just the right time.
Mm-hmm. I don't really. Well, obviously I don't know him, but I haven't really studied him and his personality and how he thinks.
Well, he hasn't got out of IBM yet, so he needs to keep it up there before he can dump it.
Well, here's the thing: for him to come out today, so pro the stock market, and beating up on Bitcoin, maybe I'm becoming a conspiracy theorist. I don't know, but it didn't seem, something seemed disingenuous about it. And I don't know. Maybe it's all in my head.
Have you seen what happened to Kodak?
Well, yeah, and do you know why?
Yeah, because they're going to have some sort of a photo deal paid, using Bitcoin or using Kodak coin.
Well, here's the deal. I was just waiting for the right opportunity to bring this up. Kodak's latest company to benefit from jumping on the blockchain bandwagon. Oh, I can't believe they did that. It's a premium article. Let me see if I go at it a second time. The other day... Okay, let me click it one more time. If that doesn't work, then I'd have to Google the headline. Kodak will be using the blockchain to track photos licensed through the system. It's going to let me read it this time. Kodak shares more than doubled on price Tuesday following an announcement the historically influential photography company. Okay. Now, I'll go get the story. They also came out with a mining rig. Did you hear about that?
No.
Okay. I'll find that piece of news here in a minute if I can. Okay. Let's try this. Shares of Eastman Kodak Company more than doubled on Tuesday after the one-time leader in photography became the latest company to jump on the crypto bandwagon. The storied Rochester, New York-based company said in a statement it is launching a cryptocurrency called Kodak Coin for photographers, part of Kodak One, an image rights management platform, and a licensing partnership with WENN Digital. The platform uses blockchain technology, the backbone of Bitcoin and other digital currencies that have surged in recent months and raised fears of a price bubble. Okay, the stock was last up 92% at US $5.95 in mid-afternoon trading on the New York Stock Exchange. And what's it at today?
12.
So the film pioneer, founded over a century ago, has struggled to transform itself into an imaging software and technology company. Kodak was a Dow Jones Industrials component until 2004, and its stock has slumped 90% since it emerged from bankruptcy in 2013. Several other companies in recent weeks have been rewarded with sharp rises in price after announcing their transformation into cryptocurrency business. Dennis Dick, a proprietary trader at Bright Trading in Vegas, says this is getting ridiculous. From a fundamental point of view, none of this makes sense. Riot blockchain shares have tripled since October. That's one you brought to our attention, when the former biotech firm changed its name and said it was revising its business to focus on bitcoins. Soft drink maker Long Island Iced Tea has more than doubled since it said it was shifting its focus to blockchain technology and changing its name to Long Blockchain Corp. Also on Tuesday, Inpixon surged 9 cents or 40% to 31 cents per share after the data analytics company announced it would adopt blockchain technology. Oh my God. All you got to do is issue a press release that says you're going to, use blockchain and your stock goes up. This is unbelievable. This is like the tech thing. If you put web or internet or net or anything, any of those terms, those new terms in your company name, your stock rocked. Yeah, there is an issue there. So now, where did I see this Kodak mining rig? Maybe I imagined it, but yeah. It was announced at the Consumer Electronics Show. That's it. Kodak also, along with everything I just said, has plans to install rows of Bitcoin mining rigs at its headquarters in Rochester, New York. Details of this second scheme, which is being branded the Kodak Cash Miner with a K, was outlined at the CES Tech Show in Vegas. Customers will pay up front to rent mining capacity. Kodak is the latest in a series of companies to see its value jump.
Every man and his dog is in this mining stuff, It's kind of getting...
It's getting... I know. I'm starting to smell tulips, and I really don't want to. It's overwhelming. That is the mining rig. Now, to put together your own mining rig is about $3,000 to $5,000. You can do it with any computer, but to build one specifically for that purpose, so that you get the most bang for your buck and create the most hash marks or whatever, however that end of it works. All right, I guess we can move on to the next topic here. What do you got? What do you want to look at? This was I was showing off the bonds. You mentioned the bonds dropping. Last night, our alert on the bonds was to consider selling 149.30, and important prices, important areas, almost always tested. So the first drop took us down to 149.19, so that's 21 cents, or 21 ticks times 31.75 per tick. So that's over $600 per contract right there. We get back over the trigger again, and this time we drop all the way down to 149.02, so that's 28 times 37.25. 800-900 bucks per contract. Now it's heading back up to the trigger again. This has been a huge sell-off in bonds over the last few days, John. What is this telling us? What do we take from this?
What are you looking at? Or the bonds?
This is bonds, yeah. I mean,
yeah, no. I think it might go up and test that 150, or you see how it could be putting in a head and shoulders bottom here, Dwayne. And actually, you know, if the bonds,
this would be the head, and here's the shoulder, and then we could have an inverse head and shoulders, guys.
Yeah, and then if we start going up, you know, well, it's hard to say, but that might actually be negative for the market. So, but look, do you see where we're starting to come off now, or at least on the Nasdaq?
Let's go take a look. Okay, there's the Nasdaq.
See, this could turn into a day where, you know, if we don't, you know, if we close down 6650 or lower than that, it could actually drag the whole market down, and if the semiconductors, also go down, it just makes it worse. You know, I mean, it's the same stuff we saw. We got a complete mixed bag today because the banks are going through the roof. They're almost making new highs because of the bonds, right? And the transports are also super strong, but a lot of other stuff is weak now, and the healthcare is better too. Insight, that was the other one we sold. INCY, check that one out.
INCY, okay.
It's only down $1.50. It's not such a big deal, but it's had a pretty big fall.
Now, what's the story on this company?
Well, it had a big move last year. It actually ran up to about 150, and it's kind of been working its way lower, and now it's gone down a lot. And I actually know somebody who works for the company who was pretty upbeat about the prospects, but when you fail to deliver,
the 5-year chart, you see this, we're hitting a support area, potential support area. The 1-year chart is pretty depressing if you're long the stock.
Yeah, well, this is the thing about this market is, today actually the breadth is fairly negative. It got down to minus 1,200 or so, and then it rallied, and now it's minus 660 going on 690. So if the breadth starts to get deteriorating into the afternoon, it won't be good.
Let me ask you. Yesterday, I asked you if you use the advanced decline line as a part of your holistic way of looking at the markets, and you said yes. Are there any certain defining numbers that you use if it's skewed positive or negative by a certain amount, a certain percentage? Is there?
It's very tricky. You can't.
So it's more of a discretionary than a rules-based.
Yeah, absolutely. Because sometimes the market can do the opposite of what the breadth is doing now.
Sure.
And like for example, right now, the breadth is, I'd say, still fairly strong, and yet the market's starting to come off. At least in the Nasdaq, the rest of it's holding off. But where I think the breadth can, the advanced decline can be helpful, is in a day, like this morning when it's just making new lows. And here's the thing, this morning is a good example because what happened right on the open is we actually rallied, right? We rallied actually quite a bit, and then we went up for 15, 20 minutes, a half an hour, and then we sort of slammed down. And at that point, all through that, the advanced decline was getting worse and worse. So it sort of at least gave you the confidence to short the market. It's hard to short the market when you have an early rally because you think it's going to be like these other days where the market's turned and gone up 50 or 100 points or something. So it could have been one of those days because this market is so strong, you never know that's not going to happen. Today it didn't happen right away. We went to a new low first, or a double bottom on the S&P, and then we turned, and more or less coincidentally with that turn, the breadth started improving. Now it's still negative. So there's more losers than winners today, and we've cut our losses from minus 1,200 to minus 600. So it's a definite improvement, but it doesn't appear to be enough to get us back to positive. Now, if we were to rally, if the breadth goes back positive today, I'd say the market is going to rally almost 100% certain.
Okay.
So what this advanced decline doesn't do is it doesn't, you just don't get a kind of a buy and you can just go in and buy the market thinking you're going to make money, because sometimes the market will do something different. It might go down first and then go up. It's not that easy. It's not a lay down misere by any means.
Gotcha.
So and
980.
and this look, there's an interesting thing called a TECL, which is a ETF on the tech sector, and it's been unbelievable. It's just been one of the meteoric of all indices higher. It's gone from, it's gone up tenfold, no, more than tenfold. It's gone up like 50-fold since 09, and it actually has started to come off here, and it's actually looking pretty bearish right now. And so I think we've seen a trend change of significance potentially developing here, but we've been fooled before. This thing looks a little bit like Nvidia did a week ago when it had that break, and then it actually managed to get to a new high. So just because it looks bearish doesn't mean to say it is,
Sure.
So,
hey, do you know? I'm sure you know of Fran Tarkington.
Yeah.
Well, I've got a Wikipedia page. I'll just pull that up, I guess. Okay. There he is. Okay, because the picture I pulled up last night or the night before was a much younger man. Former National Football League quarterback, television personality, computer software executive. He played for 18 seasons, mostly with the Minnesota Vikings. Well, I am part of an organization. It's, how do I say, sponsor of the show that was supposed to kick in last year, and I never got it worked in, and I'm getting it worked in this year. But it's called Identity Shield and Legal Shield. Very much like, what's that, LifeLock thing? Except this also has a legal component where you always you have an app, and your attorneys, you touch a button and you talk to the guy. Anyway, it's a good quality program. I was invited to come to one of their seminars on the 25th. Fran Tarkington is going to be the guest speaker, like a motivational speaker kind of thing. And I said, well, I'll tell you what, if you can get Fran to speak at a meeting I hold, I'll do it. I was just joking. And the guy messaged me back and he said, okay, he's locked in. I'm like, oh, wait a minute, what is this going to cost? He goes, it's on me. I really need you to be at this meeting. I said, you for real? Because this is text. I got it in writing. He goes, yeah, for real. So I'm going to be doing a seminar here sometime in the near future in the Phoenix area. It'll probably be in the conference room at the Better Business Bureau downtown. They got a nice conference room there I can use. And you'll get to meet and shake hands with Fran Tarkington if you're in the greater Phoenix area and you have an interest in Fran Tarkington and football and whatnot. He'll be there to speak about business. He'll talk a little bit about the identity shield, about the legal shield, and then I will talk, of course, about CFRN and the mentoring program that we have. I'll talk about Christian traders and our new CT global token. So a good time will be had by all. I'll keep you guys posted as to the date. I just thought that was pretty exciting.
Great, well done.
Well, some things just fall in your lap. I mean, it's like I wasn't out trying to sign up a name to draw people to a meeting, but I knew that it would be good if I had such a meeting and drew some people, and there it was, you know.
Sure.
Good.
Take a look at the lumber. I think the top might be in on the lumber. We actually just got a sell at 462 a minute ago.
I don't know if I can bring up lumber here, John. What's your symbol?
LB, LBH, 8 or 18, whatever you use.
Let's see if LB brings up anything. Yeah, I think I've brought up lumber before. LB. Yeah, lumber. Okay.
Probably
so,
March.
F8? No?
H8. H8.
H8? Okay. LBSH8. There we go. And let me put this on a daily for a moment. There we go. That's an interesting little gap there. Okay, tell us what we're looking at. It's a daily chart.
Well, you see where back in November, early November, you see you had a kind of a doji there. This little sell-off here, you could have a potential negative before the day's out. It's selling off fairly fast right now. Well, maybe it isn't. Just came back a little bit. So, but if it does break down from here, it's actually kind of a double top. See that? Almost an exact double top there.
Well, okay, that's on the daily, guys. Let me bring it up on the 30 minutes, and it'll be okay. Now it looks like. Yeah. And I guess some people might see that as an inverted head and shoulders, potentially. I'm not a big pattern recognition guy, but
look, it was a trade. You know, we sort of got a couple of points up our sleeve. You have to be very careful. But if this now on the other side, if the lumber breaks out above 462.63, it could go for a 10 or 20 point run to the upside. You know, and that'd be all-time new highs without any doubt whatsoever. Yeah. So we're actually at an all-time high right there at 62.
An all-time high on lumber.
Yeah.
Does that tell us there's a building boom coming?
Well, it's been forecasting it. You know, it's just the way. It's a combination of the hurricane damage and the building boom at the same time.
Oh, and if this infrastructure package goes through, I'm assuming there'll be some lumber used there at some point. Well, we definitely on the 30-minute chart are setting up for a long. I mean, with an up close on this candle, we would buy the open of the next candle plus one tick, and be wary as we approach this level. You know, of course, you could wait and enter once you break above that, but then you miss all this, and this might be all you get, and that's okay. I don't know what lumber pays, but if it went from 460 up to, let's see, wait,
I think it's $150 a contract.
If it went from 460 to 462, I mean it can move $2, I guess. Is that right?
So, yeah,
$2. Yeah. Okay. And so $2, if you had one contract and it moved $2, what's that worth?
$300.
$300.
I think it's worth. I think so. Yeah.
Okay, and then you trail your stop, and if it's able to get through this area with gusto, then you can apply a little bit of math, like so. And get an idea of where price may be heading. This is just Fibonacci math, no secret, no black magic, none of that. So it's telling you that if you get a 62% duplication of the last leg up, these are the prices you could be looking at. Now, Okay. Well, thanks for bringing that to our attention. How about crude numbers came out today? How did they come out?
Well, I don't know. There
was supposed to be a draw, wasn't there?
we were expecting it. Yeah, we're expecting, which would be eight.
Quiet.
Which would be 8 in a row. Yeah, just because, I mean, the crude could be a drawdown. The stock is not moving yet, but it could move later on.
Our highest weekly trading zone for crude is, you ready for this? 6360/6365. You gotta love it when that happens. Okay, so again, guys, to everyone in the audience, partners, CFRN partners, had this number in their inbox Monday morning at 6:15 a.m. Eastern. So prices run up on crude, hit the highest weekly trading zone that we have for the week. Does that mean it can't trade through it and close higher? No, it can.
Can you get the news up of the day?
I'm sorry?
See what the... Can you get the...
Yeah, I sure can. Okay, economic calendar. By the way, guys, for economic calendar, I use investing.com. Let me show you what it looks like. It works well for me because it gives me the world at a glance. Europe, Great Britain. I mean, where's that? Germany. Okay, 10:30 this morning Eastern. Crude oil inventories. Yep, minus 2.395 million was the actual. The forecast was minus 2.441. That's the Cushing. No. Okay, that's Cushing crude. The regular crude. Now, why is that number in green, John? If it's a minus, doesn't that seem odd? They were the previous was -7. They were forecasting -3.
You know why it's green is because it's bullish. It's green because it's bullish for crude.
Oh, bullish for price. Okay, gotcha.
And you see, this is a surplus, so it's bearish. So I guess they put it in red.
Okay. All right. Late tonight, guys, retail sales come out of Australia at 7:30 p.m. Eastern. So if you're trading on the Globex session, is this something you should know? Yeah. It's better to know it than to not know it. Is it going to rock the markets? I highly doubt it. But it is a high-impact news event, so it does have the potential to move the markets. Now, if you go right up here and you click on tomorrow, Thursday, and so you're able to plan your day tomorrow. We don't trade news events. We do our best to go flat ahead of all, especially high impact news events. Let the market sort itself out and then come back in. Now, tomorrow morning the ECB will publish a count of monetary policy meeting. That's like our Fed minutes. Then the next high impact will be at 8:30 Eastern tomorrow morning, PPI. And that's it on high impact news for Thursday around the world. All right. And then if you click on this week, you get the whole week at a glance. And so we can just scoot it all the way down to Friday and see if anything big's happening. In the U.S., we got core CPI, core retail sales.
That could be a big deal. If that CPI comes in better than expected, could move gold and silver big time.
All right, well, keep that in mind, guys, because at 8:30 a.m. Eastern on Friday, we've got core CPI,
and then we've got the grains at midday as well.
Oh, the WASD, yeah, that's a big one. Yeah, WASD is to the agricultural world what the Fed announcement is to Wall Street, so it can definitely move the market. Yeah, so we don't have a lot. We've got enough news to keep the market moving, and that's what we were talking about earlier. The Concierge Trade Alerts have done so well of late because we've had some, flow in the market. Now, this is not a dream setup here. I mean, this was gorgeous, but the sideways. So the beauty of the alerts is you get 8 markets, 2 trades per market. That's 16 potential trade setups or potential triggers. And the fact that, as I've shown you today, important prices and important areas are almost always tested. From that one email last night, you probably have seen 20 to 30 triggers in this session. So you can become somewhat selective, okay? Why would I trade crude with, in fact, I've got a trade set up on the NQ like this, see, where it's really flowing, or, I mean, gosh, just throw a rock and you'll hit something. The Dow, where the S&P go? Yeah, the S&P. See, the S&P in this session, we've come from this zone at 27.48 all the way down to 37. That's 11 points down and 11 points back up. That's 22 S&P points, simply trading zone to zone to zone. Now, you can see that there's, on the alert last night, we said to consider selling 27.45. So from 45 down to 37, it's basically 8 points, but it missed it right there by a tick. But important prices, important areas are almost always tested. So what did it do? It came back up. It got above the trigger. This time it gave the full 8. So whether you were trading zone to zone, or you were using the Concierge Trade Alert, or you were, taking both things into consideration, with some really, really nice opportunities. And that's because the river was flowing. When the river's not flowing, there's nothing, all the creativity in the world. I mean, it's not so long ago that the S&P was giving us 5-point daily ranges and 8-point daily ranges, when for the last, as far back as I can see in history, the average daily range from the low of the day to the high of the day on the S&P is about 20 points. Okay, that's from the absolute low to the absolute high, or vice versa. And if you figure out a way to catch the low of the day and the high of the day, I would love to come and learn that from you. Okay, you're never going to get it all. If you can get in there and get whatever is easily, not easily, there is no easy, but simply identifiable based upon the methodology that you use, that gives you a
Rain, can you put up the orange juice?
yeah. Well, yeah, I can. See, whatever your definable edge is, that's what you got to focus on. If you don't have a definable edge, then you know better than anyone that you need, that's what you do need. So, get cracking. Orange juice. Tell me what your symbol is.
OJ.
OJ?
OJH.
He got out of jail, right? Or did he?
He did. He did, yeah.
OJ. I don't think... OJPY? That's not right. No. This says Euro style. Anybody out there in the audience know the DT Pro? I can look it up, I guess. It snowed in Florida, right?
It did.
Did it?
It snowed in the desert. It snowed in the Sahara yesterday.
It snowed in the Sahara? Really?
Yeah. Yeah.
Wow. Well, if you're going to look something up, okay, this doesn't. If I knew the symbol, I wouldn't be here. Yeah, we got nothing. Anybody in the audience? Nobody in the audience. Okay. All right, I can't bring it up, John, unless I can bring it up on this other thing over here.
No, look, it's just going back up again. It's kind of looking, it kind of got knocked down even in the cold weather, and it's starting to pick up now because there's possibly some damage being done to the crop, and it's gone down a lot, but it's up quite, it's up. It could be.
Okay, is this? Am I looking at the right thing here?
Yeah.
OJH18. Boy, that sure sounds like one of ours. OJH18. Oh no, it's got 18, not 8. There must be some. So, sure it's not Z.
It's got a sort of a cup and handle, so it could go. It could have a big move from here, but just depends on. Obviously, if it got cold again, it might really push it.
All right. So this chart here. What is this? This is a 3-month chart. Should I look at something smaller?
Yeah, try 7 days.
Well, not crazy about that chart, but it's a line chart.
Or monthly, maybe.
So, what are you saying here? That if we get above,
well, if it suddenly went vertical, it could rally about 5 or 6 points, maybe.
Okay. Now, trading in a market like orange juice, that's a little bit difficult, right? Because volume can be sporadic, and the difference between the bid and the ask, it's not like trading the S&P, yeah.
Yeah, it can be wide. But it's been it's a good trending market. That's the thing. So, it's been down for a long time, and then it turned on the cold. Finally. So, well, as it is right now, we just went positive on the Dow. So that's a pretty good omen for the rest of the day by the looks of it, and the advances are cutting their losses as well. So this looks like it's just a one-day pullback.
All right, where were we at on the Dow? On the Dow, the email said, consider selling 25,335. Okay. 25,335. That should be right about. You can almost spot it before I go over there. Come on. Wow. It's got a bad pixel on my screen. It won't draw a line. Okay. Drew a line. Alright, 27. I'm sorry. 25,335.
Look at this Dow. We've gone straight through 25,000, and the best pullback we can get is to 25,240. How about that? That gives you an idea how strong this market is.
25,335. Okay. And so, anybody that sold it there, the potential in that trade, price went to 222. So, over 100 points available. But keep in mind, we never get out at the swing high or swing low because we train to trail your stop. And if you trail your stop as we train, you're always going to leave a little something on the table. And you can't look back and you can't regret. Let the market take you out. Don't just jump out because you got a couple green ticks. Let the market make the decision. No, I can't decide when to get out. Okay, then use a trailing stop and let the market take you out. All right, just remember, if the market takes you out on a trailing stop, you made a profit on that trade. Okay? It may not have been your target. It may not have been what you had hoped and dreamed of, but it is what it is. So we had over 100 points available on the downside. We've rallied back up to get above the trigger. And so the question now is do we take out this swing high from yesterday, or do we come back below the trigger, important prices, important areas, and get another leg to the downside? I don't know the answer to that question. However, what I do know is that it's clearly defined for me that if I'm going to go long, I know exactly where I'm going long, and if I'm going to go short, I know exactly where I'm going short. I just got to look at the email from last night. Okay? If it gets back below 335, I want to be short. If it gets above this area up here, where it could not get above yesterday, there's a wall of sellers up there. They slapped it down, but it's coming right back. Okay? So wait until you have what I call actionable intel. Okay? Don't try to fantasize, what's going to happen, and so you do this, and you put your order on to buy or sell on a stop, and then you come back hours later and expect to be elated and are disappointed. I was talking with someone about that yesterday. The set it and forget it. We'd all like to think that would work in the auto trading, but I know so many people that have burned up their life chasing that dream. I mean, at some point you have an account size that is suited to, some set and forget it stuff. But as you're getting going, the early stages, try to be in front of the screen when you have a trade on, because you can earn in a 3-minute trade the same thing you earn in a 3-day trade. It's just a matter of the number of contracts that you're trading. However, you can't, hit the ground running with 10 or 100 contracts. You start with one, and we teach you to grow your account balance by $2,000, add a second one, and then we hand you a calendar called the 24/20 Blueprint. You know exactly what day you're going to add the third, and exactly what day you're going to add the fourth. And the goal is in 24 months, you work your way up to 20 contracts. Okay? Each contract you add is underwritten by money you earned in the market. If you follow that and stick to it, now, are there going to be bumps in the road? Yes. Are you going to slide off the road into the ditch? Yes. Will you have someone standing by as your personal mentor to help you get back up on the highway, and get back in the center lane? Yes. It's not a matter of if it happens, it's a matter of when it happens. It's a business based on probabilities. No one knows what the outcome of any trade is going to be, and I don't care how flashy their website is or how compelling their email. It's not possible. Okay? And I'm a believer. So, all right, John, what else would you like to talk about? Gold? We haven't talked about gold, have we?
Well, I did say that it ran up to 1326 this morning, spiked, came back down. Looks a little bit heavy at the moment, having come off 1320. And I think if it goes back down to 1309, it's probably going to take it out this time, and it might test 1300 or even 1294. So it may be in a bit of trouble here. Unless I think if it breaks back over 20 and gets sort of into the 1322s or higher, then it could be a whole different ballgame. So,
we had a weekly zone up at 3132, and we fell short. So that's not a good sign when it falls that short. It shows some weakness in the market, but that's okay. We're back over 1300, and we have been now for a minute. Last night, in the email sent out, it said to consider buying gold at 1322. And so 1322, of course, we were looking for a target of 31. That would be our ultimate target. But you trail your stop and you take what you can get. See, this is a good example here of, you got a target of 31, but the market only wants to go to 28.6. So are you going to relinquish all of it because it won't do what you want it to do? I used to be that stubborn and that hard-headed, you know. If it won't go there, my number, then, well, that's just foolishness. So from 22 up to 28. So that's $600 per contract available right there. So per contract available. That's what the market made available. All we made available was just simply the important price, important place where we would feel comfortable being long, at least for a moment. So where do you think we go from here, John? Are we turning back up?
It's a tough call. It's a tough call right now. If it sort of creeps higher, it could actually accelerate. It could end up accelerating higher, and I wouldn't rule it out. It seems, this liftoff from 1309 this morning was pretty strong, and we've probed the lows here a couple of times since, and held them, at least for the moment. And platinum is very strong, which is encouraging. And we are up in the day, so so far we're up in the day. I'm a little bit bothered by the silver not being so strong, so that's.
Well.
And the only thing that might lift gold between now and tomorrow and going into the end of the week is if the Dow, if these markets don't get much higher and then they either turn down late or turn down tonight and come in lower tomorrow. I think if the markets come in lower tomorrow, they're going to have a problem. They're going to be in trouble. But right now, it looks like we've had a one-day pullback and the market looks pretty strong.
Well, do you think it's safe to say that we have established 1300 as a base and that we should stay above that?
No. I think because if it does break from here, it's probably going to take out that 1310 and see the problem is we haven't really tested 1300 yet, and so that's in the offing, and in doing so, we might just see a spike down to 1294 somewhere like that, and then we could go back up again. But the whole thing is a little bit fragile, and in spite of our bullishness, we are mindful of the possibility that if we did break down, $30 or $40 from here, it would kind of change. It would change the picture to potentially one more negative. So.
Gotcha. All right, let me see what else we have.
One other supporting thing that's very important. I meant to mention it yesterday. Is there's been the Japanese stopped the QE or tapered it, and that caused the yen to toot up very quickly, very dramatically, and that is helpful to gold. That's supportive of gold. In fact, if this is the beginning of a big rally in the yen, it bodes very well for gold. And actually, it doesn't bode so well for the markets. So, and it was right on that news last night when that happened that the market started selling off, and that also influenced the bonds.
The stock market's unrelenting march higher has changed how investors see this bull market, according to Credit Suisse. As the S&P 500 rose, investors position themselves to profit from new highs by demanding more call options, which are instruments that give them the right to buy stocks at an agreed price. Weren't you talking about this yesterday?
Yeah. I know there's massive buying, probably record buying of call options going on right now. So
for those in the audience that maybe don't understand options so much like me, why don't you, I know what a put and a call is, but could you kind of give a thumbnail sketch for the audience?
Well, if you we were talking about the 2750s, which we're exactly right at right now. If you buy a 2750 call, you have the right to buy 100 shares, usually 100 shares of, or 100 units of the S&P. I'm not sure if it's the same for this particular S&P, but if it was a $2,750 stock or $27.50 stock, you'd be buying 100 shares for each option. So, and the trick is, ideally, options tend to be reasonably priced when you're buying below. You're not in the money, you're out of the money. I mean, actually, buying in the money or at the money is a good thing, because you still get the leverage, but you get the bang for the buck as well. But you have to pay some sort of a premium. So the premium, as you go higher, if you're buying in the money or at the money, you're going to pay a premium for the pleasure of doing that, right? Mm-hmm. Or the privilege of doing that. But as you go higher, you'll get the bang for the buck. So if we suddenly run up to 2,800 or more, you get a pretty good profit from that. But you don't get the full value of 50 to you get the 50 points value, because probably 20 of those points might be premium. So by the time you get up to 2,800, you're not going to be 50 points higher. You're going to be maybe 30 points higher or something like that, pro rata in terms of the option gain. Now, the best time to buy a call is obviously like early this morning. If you can catch that turn, people, the price of first of all, you got people selling calls because they're panicking, right? When the market's tanking. So that pushes the price down and pushes the premium down. So, you might get lucky and get the best, a really good price on the day. And then if you get this rally like we've had, where we just went positive, the pretty quickly. So there's a lot to be made from timing these options. But the problem is, as well, the difficulty with these options, and to a certain extent the ETFs, is they don't always go in sync with the market. And especially with the VIXs right now, there's very little. We had we had a flash of premium here over the last 24 hours or so, and it's already dissipated because of the market bouncing back. Now, actually, the VIX is more negative than the market. In other words, the fact that the XIV, remember we were talking about it yesterday, it's almost back to an all-time high. In fact, I think it's almost, let's have a quick look. Yeah, it's actually practically an all-time high. And yet the S&P is somewhat off the high still. So the fact that the XIV is almost at a new high kind of is really bullish for the market.
All right.
Now, if that changes, what I think is happening here is the VIX went down. It went up, and it's come back down to where it started out from yesterday. What I would be paying attention to is, to see if we get an upturn or another buy signal off the VIX, because sometimes when you get a major bottom, you get this false start, you get a false spike, and then you get the real turn, and then the next spike could be a really big one. So the fact that the market has shown some fragility here, and since yesterday, could be a harbinger of things to come. And remember, you had this thing with Trump yesterday. It doesn't look like they're going to have a shutdown at the moment, but I think they're going to. I think this. Look, they had this guy Steny Hoyer sitting at his left, and he had a real sour face all day, which I thought was very almost contrived. Mm-hmm. I used to like that guy, but I've really gone off him very badly.
What's his name again?
Steny Hoyer.
Okay.
And
where do you find him at?
He's one of the Democratic leaders. He's a whip or you know, you know, the gang of, there's about four of them. There's Schumer, Pelosi, Hoyer, and somebody else, and you know, they all just the usual. You know, they got the knives out and they're trying to disrupt, and they're, you know, lying through their teeth most of the time. So, and he had a real sour puss on all throughout the whole thing with Trump, and I thought it was very, you know, just unacceptable, and not a very, you know, not a very gracious way. You know, most of the other people were very enthusiastic in the room. Mm-hmm. I thought his behavior was very, very poor, very uncalled for. And, you know, they don't like it because Trump has got one over on them and he's not going to give in too easily. And they may push the, you know, they may push the limit and try to get the shutdown or something. If we do get a shutdown, you're gonna, you know, it's gonna rock the markets. It's gonna be probably more like Brian Ross, you know, Brian Ross pullback, or even bigger than that. So I think this is a little bit of a taste. You know, what's the market really doing today? The market broke. By the bid, by the dip, it worked. Okay. The next one, you might want to be careful buying the dip, because the next one, there might not be a dip, there might not be a bid. If the, you know, that's sort of what happened with the Brian Ross thing. You know, it just kept selling and selling and selling. It did turn, and you know, this market will turn, I'm pretty sure. But you know, you might get a bigger move than most people are expecting. If something outside the box occurs, you know.
Gotcha.
So I'd be ready for that. I'd be ready for that, because, you know, it's kind of like the oil. Remember the oil when it was much lower? It had a habit of rallying during the night and then coming back, kind of like the gold. You know, I mean, the gold ran up during the night, came back, gave you a chance to rebuy, and then it had another rally. But at the moment, it's fairly muted. But on the platinum has been different, and it's gone right up back to the highs. So, and I think if the gold started rallying into the afternoon here, it might actually run up faster than you think, and that could spook the market as well. So, you know, this, in spite of the fact that the S&P just went positive and is back to negative again, you know, if this turns out to be a day where the market couldn't get back to positive and closes lower, I don't think it's going to bode too well for the next few days.
This gold chart that I have up right now, this 30-minute chart, I did fibs of just the last leg up. You have to look at the whole move or just the last leg up or down. And so last leg up, we have pulled back to a 50% Fibonacci retracement. We've also pulled back to consolidate inside of a weekly trading zone at 1319/1320. Now, three things happen when price hits a weekly trading zone. The most common thing is consolidation, the second is rejection, and the third, and the most rare, but it happens, is a hot knife through butter. What that means is on a 30-minute candle, it appears that it just ran right through the zone as if it wasn't even there. On a smaller time frame, you would see that there was some back and forth, okay? But on the 30-minute, looks like, and so historical observance has taught us that when we get a hot knife through butter, the highest probability event is that price will pull back to the zone that it sliced through. It will consolidate for as long as it needs to consolidate, and in most instances, or the highest probability instance, is that it will then continue in the direction that it sliced through.
And you know what? I'm telling you, if this gold goes from here, I think it's going to stop at 1328. I think it's going to go all the way to 1360 very, very fast, actually. And it might even go all the way to 1400. So
our highest zone for the week on that day is 42.43. So
yeah, because listen, if they shut down the economy, the government.
Do you think that's going to happen? Is Trump the one guy? Is Trump the one guy that would actually let that happen?
look, he's got to stick to his guns, and they may try to, just make a point. I think if they do, it'll be resolved. And I think next week, I believe that from about the 21st or 2nd of January through maybe the 26th, we might get a very big rally again. So if we get knocked down this week, it could set us up for a big rally next week. And but it could, just shutting the government down might be enough to move the gold up $30, $40, $50 from here, maybe even more. It could really spike higher. And by the way, the market is, I'm actually getting a buy signal on the VIXs now, and the markets are starting to come off here. So the other thing is when you're in a bull market this powerful, it doesn't give the highs up too easily. That's a golden rule, and that's the case today. We're seeing it, like the FANGs have had a pretty good rally this morning, but they're starting to give it up. Google hasn't been able to move up today. Price lines looking a little bit vulnerable too, and maybe the drugs are starting to fracture. So, and look, guess what's happening right now? The bank stocks, actually, I would sell the bank stocks across the board right now. They look like they're coming off pretty fast, which may be pulling the market down. So the fact that the banks are starting to go down is actually quite negative for the market.
Now, guys, this may give you another opportunity. Last night on the S&P, we said to consider selling 27.45 in the email. We dropped 7 3/4 points back above the trigger, and then in one 30-minute candle, we dropped 8 points. Now we've gotten back above the trigger again, and I would keep in mind that from this low to this high, this area right here that we had said to consider selling, now it is a 50% Fibonacci retracement. So I think I would probably wait and see if that 50% retracement is going to hold. By the time it gets that far, we fully expect it to go to the zone below. But if you wanted to increase the high probability nature of the trade, and you understand that you don't have to get 10 points out of an S&P trade to make good money. What you have to do is you have to earn the right to trade multiple contracts. Because if you only take 2 points out of this move, and you've earned the right to trade 10 contracts, that's a nice day's work. So I mean, you could literally sell 41. I mean, let this the 62% retracement's at 27.42 and a half. Let the thing get down to 27.41. You might consider selling that on a stop. So all this turbulence here, just you wait it out. Well, what if it doesn't go down there? Well, then you don't want to be in that trade. So at 41, I would set a target at 37. Once it hit 38, or I'm sorry, 41 to 38, that's a 3-point trade. I know the zone's at 27, but sometimes it comes up, a tad short. So from 41, in fact, that'll be our radio trade for the day. Haven't done one in a while. Consider selling 27.41 to 27.38. Live radio trade of the day. I'll write it in so we can have a look at it tomorrow. Consider selling ESH 8 at 27.41. Stop. Target 27.38. So you're looking for 3 points, and you're going to use a 2-point stop loss. Okay.
I better grab this. Listen,
all right, John.
I'll sign off. And,
we'll talk to you tomorrow. Have a good day. Okay, 2 points on the stop loss. that are selling ESH8 at 27.41. Now, let me rephrase that. I'll say on a stop. I think more people understand what that means. There we go. On a stop. Okay, there we go. That's everything I want to say about that. Williamson asks, when's the deadline to pass the bill before the shutdown? You know, Williamson, I don't know. I probably should. Somebody in the audience know what the date is on the deadline? Oh, let me mute John's mic so he can move about freely. Okay. Could I tuck into giving us all the ES zones? Yeah, sure, Alan. You betcha. Alright, below that one, is there anything I can drag up? Yeah, no, one. From the previous week. Okay, below 36.37, we got 26.27. Normally don't do this till Thursday for anyone that's new, but I'm doing it today, Wednesday. And then below that's 27.10/11. And I'm not going to take the time to put on the chart right now, but there's one more zone below that. 2675/2676. That's almost a 35-point playing field from zone to zone. I don't think we'll see it, but you never know. Embrace the possibilities. Okay. 27.10, 27.11. Oh, let's open this up. It's becoming very crowded here. And let's get these out of here because we don't need them now. Okay. Now, this whole conditional, this thing is conditional based upon, does price come down and touch 41? Okay. Selling 41 on a stop, so price has actually got to get there before you have a trade. Could be late this afternoon. It could be tonight when Globex opens. Or you know what? Increase the font, you can read it. Oh, well, that's clever. Okay. And now you can spell properly. Oh, that's still a challenge. Okay. Consider. There we go. Okay. I mean, price. Remember, we're still in a decision-making process up here. Important prices, important areas are almost always tested. We've had one down leg, two down legs off the trigger. It's starting to toy with the trigger again. Okay. This time, it's possible if you look left, it's possible this area could be support. This is why we're getting below that turbulence and saying, you know, if it gets as far as 71, then it's a really high probability that it'll go to 37 or at least 38. Okay, and 38's 3 points. So if it goes to 38 and you lock in 2.5 points, you're now trailing by like 2 ticks. If it comes back and takes you out, hey, no problem. You got what you came for. Okay? All right. And then above that, Alan, there's only one more above, and that's way up at 77, 78. I don't well, that's 20 points. Well, no, from where we are now, it's more than that. It's 30 points. Yeah, it could happen, but at least you know where it's at. 2777/2778 is the highest weekly S&P zone. The lowest weekly S&P zone, 2675/2676. Okay? All right. And we're going to go to our good word for the day. I'm going to check the chat box. And we're going to call it a day because we're over our time. Okay, Frederick said that January 19th. Michael thought it was 19th, and Frederick said it is the 19th. That is the deadline to pass the bill before a shutdown. Williamson, I did. I'm sorry I haven't responded to that email. I did get it, and I agree with it, and I'm all for it. So how about you write your first article, then just email it to me, and then we'll figure out how we're going to set it up as far as, you know, a column. And let me know when you send that article over. Let me know how much proofreading and editing it needs, if any. And also, let me know if you have in your mind that you're going to maybe write one piece a week, or, you know, a couple a week, or, you know, however you want to do it is fine. But when I establish the blog or the column, I will, or the subsection of the blog, I will let people know when they can expect a new article. Okay? And if you don't want to pin yourself down, then we'll just call it publishes, you know, randomly, or as the situation warrants. We'll put something in there. So I don't want you to feel under the gun. How long should it be? You know, it depends. Depends. 500 words is an acceptable article by editorial standards. But if you have more, then write it, you know. Give me at least 500 words, but if you want to go over that, it's fine. Okay, sounds good. You're welcome, Alan. Okay, and thank you, Williamson. I appreciate that very much. Williamson is going to be writing a column for us, and what was the name you were thinking of again? Type that in for me. I know I read it. It will be on current scientific issues, global warming, etc., solar energy, coal. Okay. Okay, guys, our good word for the day. Hang on, I'm trying to get there. We got one too many things open over here, so I can't see what I need to see. But I will. I'm heading. Okay. Fruit of the Spirit. Bearing fruit, sharing fruit. These are things I know that you've heard over the course of time as you sit in the pew and listen to the sermons, and etc. Matthew 7:20. By their fruits you will know them. Okay? And they're not talking vegetables there. Just saying. When we speak about the fruit of the Spirit, we are talking about these 9 qualities of character: love, joy, peace, long-suffering, kindness, goodness, faithfulness, gentleness, and self-control. Galatians 5:22 through 23. Love, joy, peace, long-suffering, kindness, goodness, faithfulness, gentleness, self-control. If you can nail those 9, I would love to meet you. I mean, we're all working on them, okay? And so I don't know if we're ever going to nail them in this lifetime. Look at the S&P dropping, okay? All right. These fruits are not for show. They are for sharing with others. Otherwise, they're no better than fruit that was never grown in the first place. Hold for me 1 second, please. I invite you to a radio show and tell you to hold. Yeah. I'm just rude like that. I'm sorry. Suppose you drive up to a roadside produce market, which doesn't happen a lot in Arizona, but I do remember it back home, and occasionally you will here, especially if you go up north. There's something about buying produce from the farmer who grew it, and well, it's a good experience. Take your kids. Suppose you drive up to a roadside produce market with your heart set on buying fresh vegetables. You see homegrown tomatoes, squash. Man, you just grab one of those tomatoes, grab the salt and pepper shaker. You got a meal right there. Not so much salt, though. Squash, cucumbers, several varieties of peppers, everything you need and more. Just as you start to select your items, the farmer who owns the stand says, "Sorry, this produce is not for sale. I just like to grow it and enjoy looking at it until it rots. And then I throw it away." Huh? Now, you likely haven't encountered such an absurd situation, and probably never will. That's because farmers and customers know that produce is for consuming. Sure, it's beautiful to look at, but its God-ordained purpose is to bring nutrition and health to people. If all we do is go to church and preach about fruit, analyze fruit, and examine each other's fruit, we are failing miserably. It's not enough to bear fruit. We must share that fruit with others so that they can be blessed and impacted by the kingdom of God. It's not enough to bear fruit. Now, as believers, we're supposed to bear good fruit. But we're not bearing good fruit so that we can feel good about ourselves or show it to our neighbor. It's for sharing. We must share the fruit with others so they can be blessed and impacted by the kingdom of God. The only God they ever see just might be the God in you. And that's a scary thought, right? Paul wrote this in Ephesians 2:10. "For we are God's masterpiece. He has created us anew in Christ Jesus so we can do the good things He planned for us long ago." Bearing fruit and sharing fruit are two sides of the same spiritual coin. And say that again. Bearing fruit and sharing fruit are two sides of the same spiritual coin. You can't share it if you don't bear it, all right? And so, a church that is smack dab in the middle of God's will, they'll bear good fruit. They'll touch the community. Chances are they'll grow, and prosper. And as a person, I mean, yeah, the enemy had it in for Job, and even though Job did the right thing and it bore a lot of good fruit, well, we all know that story. However, for the average person, like me, poor Job, man. Yeah. I'm just going to leave you with that. Make sure you're bearing good fruit. Your business should bear good fruit. Your relationship with your spouse should bear good fruit, and your children should bear good fruit, and your neighbor, your relationships, your business, your church. I mean, that's how you know it's healthy. If it's not bearing good fruit, then there's something there that's not healthy, some kind of pestilence, something. And so get in the prayer closet and figure out what it is. Don't try to tell God what it is. Get in the prayer closet and say, hey, God, something's not right over here or over here or over here in this area or that area. Could you please talk to me and help me to see it and understand it? I'm just going to shut up now and wait to hear from you. And just sit still for a bit. Sit still. Be still and know that I am God. That's what he said. So maybe we should try that more often. In answer to your question, Jim, yes, absolutely you can. He wants to know if he can pay for a CFRN partnership with Bitcoin. Yeah. Or Ethereum. But I know you're just kidding. So, anyway. He cracks a joke and leaves. That's okay. I always get a good laugh. All right. So, we know the deal on bearing fruit. Let's bear it and let's share it. Now, side note. Back in about 1997, I got into a habit of watching a whole lot of TBN. Please, no hate mail. I know that many people love it and many people don't love it, and that's okay. God bless America. But it's not something I watch today for my own personal reasons, but it is something I watched quite a bit back then. And well, I was going to do an infomercial. I know you're going to laugh. Because we always talk about, going into your prayer closet. And to people who've been going to church all their life, a prayer closet, you understand what that is. But let's say you take someone who didn't grow up in a religious household or a Christian household. And you invite them to church and, amazingly they say, okay. And they go and then they hear the preacher talking about getting in your prayer closet and your neighbor looks at you and goes, do you have one of those in your house, a prayer closet? And you laugh. And he goes, what are you laughing at? So anyway, I was going to sell a prefabricated prayer closet. Infomercial, TBN, call 1-800-PRAYER-CLOSET. Easy to assemble. Snaps together in 5 minutes. What is it? When you were a kid, you had a little fort, in your house somewhere. You draped a sheet over 2 couches or something. Man, and that was the swellest fort ever. Well, this would be a nice little thing, and you could make it blend with any decor. We're going to have different finishes, like if you lived in a mission-style home, and if you lived in a colonial or Victorian. I mean, are you with me here? It's just a place for you to go in and sit. If you're Catholic, you know what the confessional looks like. Kind of like that, okay? But one that blends into your home. It's in an extra bedroom or a corner. It doesn't stick out. It's not ugly. It's not a sore thumb. It's just a place where you go in and sit down and meditate. You might have a candle in there. You might have an incense in there. Not necessary. You might have a little boom box with or an MP3 player with, some good worship music that you like to play. It's not that the prayer closet itself has any magic to it. It just physically separates you from the world, and if your family, your wife or your kids, they know that you're in there, it's because you want to spend some alone time with God, and so they don't bug you. They leave you alone, right? Okay. Well, it made it all the way from my head to a cocktail napkin, and actually it was not a cocktail napkin. It was just a napkin, but I never pursued it. And so I hereby officially, on this day, the 10th day of January 2018, hereby authorize everyone within the sound of my voice today and in the years to come. If you want to take that idea and run with it, go for it. I'll help you all I can, and I just ask, some humble royalty on each unit sold. Fair enough? 1-800-PRAYER-CLOSET. Jim says, you never fail to amaze me, Jim. I worked the phones for Paul and Jan in Fontana, California in 1975 and 76. Oh, wow, that's right after Paul founded it in 73. So he hadn't got the satellites yet. Was his son born? The one that I know, oh, man, what's his name? Matt Crouch. He might not have even been born in 75. So when he flew out here to meet me, I know he took me and my broker out to a nice lunch at Black Angus. So anyway, he was a very nice guy. We were going to do some business together, and it never really happened. But all right, I don't see any questions. Okay, now look what happened right here. Okay, remember what I said about 2745, important price, important area. We know that, okay, because we had two nice moves to the downside. I said, now this will be the third time, okay, and look how far we pulled away, and then we came back, and so I said, no, let's not just resell 2745 at this point. Let's get below the turbulence down to 2741. If it gets that far down, high probability it'll go to the zone at 37. So set your target at 38. That's 3 points, risk 2 points. So had we gone with 45, we'd be triggered in and we'd be going, oh man. Okay. So what we're asking is for the market to show us, prove to us that that's what you really want to do. Because right now it's kind of looking like an inverted head and shoulders. There's a head, a little bitty shoulder, and this could turn into a little bitty shoulder. And if that happens, then price is going to shoot. A measured move would take us right back up to the zone at 57, 58. I got to run. All right. I'd love to hear more about your time spent at, oh, thank you, Tim. Tim said prayer closet. Awesome. Jim, I'd love to hear more about your time with Paul and Jan. Send me an email, support@cfrn.net, or you can come on the show and talk about it if you want. I got to run for today, though. Guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.